was another blockbuster quarter from Nvidia.
You take a look at the revenue. I mean, it is outrageous, these numbers.
Revenue soaring over 200% in the third quarter from last year.
I mean, they are the only game in town. When it comes to AI, those GPUs are essentially gold.
And it almost seems like nothing is stopping this company anytime soon.
Nvidia is quickly becoming the most powerful company in the world because it has a monopoly on the most powerful chips in the world. And after one of the best earnings calls of any company in recent history, there's really only one question left to ask. Is this the top for Nvidia stock, or are its best days still to come? Your time is valuable, so let's get right into it. Nvidia posted record revenues of $18.1 billion for the quarter, which is up by a mind-blowing 206% from a year ago, and it's 34% higher than their most recent record-breaking quarter. Analysts expected $16 billion, which was actually already pretty aggressive, and this was still 12% above their expectations. Nvidia also posted $4.02 of earnings per share. That's 19% higher than analysts expected, up a whopping 49% from last quarter, and almost 7 times higher than a year ago. I do want to point out something about Nvidia's year-over-year numbers. If you look back at their performance from last year, you'll see that they were actually hurting pretty badly. And if you break down their revenue by segment, you'll see that Nvidia's gaming business, which was their biggest business unit at the time, was basically in free fall. I'm not the kind of investor who only covers the good parts of stocks. That's why I made videos talking about the problems with Nvidia's consumer GPUs and why their gaming segment was collapsing in Q2 and Q3 of last year, a collapse that segment still hasn't fully recovered from today, while their data center revenues have nearly tripled over that time frame. Those bad quarters are a big reason why Nvidia is seeing triple-digit growth year over year today, and why we should see more crazy numbers for the next 2 quarters before they start to slow down dramatically. So don't say I didn't warn you about 9 months from now. Anyway, I don't think anyone could have predicted the sheer pricing power that Nvidia has right now with their data center solutions. Not just their H100 and upcoming H200 GPUs, but their hyperscale networking products like InfiniBand, which I've actually been talking about for a while now. But surprising Wall Street analysts was just the beginning. Nvidia also reported 74% gross margins. That's up almost 4 points quarter over quarter and over 20 points year over year. See what I mean about those year over year numbers? And they're expecting next quarter to be even better, guiding for $20 billion in revenue and 75% gross margins. 75% margins on hardware is honestly insane. But this is what happens when a company is virtually uncontested in the single fastest growing market on the planet. So even though Nvidia stock is currently near all-time highs, it's actually a lot cheaper than it used to be. Wait, the stock is cheaper now, even though it's near all-time highs? Here's a quick CNBC clip of Stacy Rasgon, Managing Director and Senior Semiconductor Analyst at Bernstein Research, explaining exactly what I mean.
At these levels, do you still invest in Nvidia? Is it still compelling, or do you put your money to work in something like AMD or Intel or another chip name that you cover?
I'll be honest. So like in Nvidia, I do like, and again, you mentioned the stock's up, whatever it is, 2 or 3x. Earnings are probably up 4 or 5x. On a valuation basis, the stock is actually very cheap. You could argue it's even cheaper than some of these other ones like AMD. Everybody with Nvidia, what they're worried about is that the numbers are getting so big so quickly, you just worry about sustainability. Now, that being said, I still think the AI opportunity is massive. I still think we're really early. I'm convinced in 5 years, in 10 years, we will be talking about numbers that are materially higher than what we are talking about today. So with Nvidia, like as always, I think you need a strong stomach. That stock has its ups and its downs, but I still think we're really early. I think the opportunity is massive. I think they're in the driver's seat. I think you have to own it.
And the stock is even cheaper than Stacy made it sound, because Nvidia's earnings are actually 7 times higher than they were a year ago, not 4 or 5. Nvidia actually has a lower PE ratio than other fantastic AI companies like Tesla and Palantir. In fact, if I go to Mumu's valuation tab for Nvidia, I can see the price to earnings ratio going back 2 years. It's well below average, which means I'd be paying a lot less for every dollar that Nvidia earns if I buy the stock right now. And below that, I can see how Nvidia compares to others in their industry. They're about twice as expensive, but that makes sense given how fast they're growing. This app is honestly like having a financial analyst right in my pocket. And if I go to their company page, I get a high-level summary of their earnings, all the analyst ratings, their quarterly earnings broken down by business segment, and tons of financial indicators that can show me when it's a good time to buy. Moomoo is by far the most comprehensive trading app that I use for stock market research and investing. It's even replaced a few apps that I was paying for. And if you sign up right now, you can get up to 15 free stocks and 5.1% interest on the cash in your account. But this offer ends soon, so make sure to download the app using my link below today. And a big thanks to Moomoo and to you for supporting the channel. Alright, so that's why Nvidia stock is cheaper now, despite trading near all-time highs. But chip companies like AMD and Intel are doing everything they can to get a piece of the pie, and even cloud providers are coming out with their own data center chips. Shouldn't Nvidia be worried about all of this competition?
You serious?
Look, no business is immune to disruption, and 75% margins can't last forever. But I don't see any threats to Nvidia anytime soon. For example, the most direct competition for Nvidia's H100 GPU is AMD's MI300X, which launches on December 6th. Here's another quick CNBC clip of Stacy Raskin explaining what AMD's chip means for Nvidia.
But how much competition are they about to get from AMD, from Intel, from maybe Microsoft? We're expecting chips to be a part of Ignite out this year. Do investors need to consider that when they think about buying at these levels?
I mean, look, you talked before the break about seeing who's pulling ahead of the pack. Like Nvidia kind of is the pack. Like let's be honest here. Like they're continually moving the goalposts, and everybody else is trying to catch up. And even if they catch up to where Nvidia was, which I don't know that they are, Nvidia is still moving ahead. I think it's really tough. Like AMD actually gave us some numbers already for what they expected for their AI sales next year. Maybe this puts it in some context. They said that their product next year is called the MI300, and they said they thought they would do, in excess of $2 billion in sales next year. I would say if Nvidia does $50 billion in data center sales next year, that will be viewed as incredibly disappointing. AMD is going to do too. I mean, it's single-digit percentage probably of what Nvidia is likely to deliver. That's what I mean when I say they are the pack.
Nvidia just has too much of a head start in the AI chip market, kind of like how Tesla has a massive head start in the electric vehicle market. But the big difference is that most people only own one car at a time, so every vehicle Tesla sells is one that their competitors didn't. Cloud service providers don't work like that. They need to handle an incredibly diverse set of workloads, most of which still don't even involve AI today. Data centers are actually portfolios of different hardware and software solutions designed to match the workloads they support. As demand for a specific kind of workload grows, a cloud service provider will buy more of the right kind of chips to support it. That's where all of Nvidia's competition actually comes in. Every data center manager is trying to deploy the right mix of systems to optimize their costs. So they'll buy chips from AMD and Intel to offload whatever workloads they can from Nvidia's GPUs, since they're so expensive. And in some cases, it might make more sense for them to build their own chips, like Microsoft's Azure Maya 100 or Google Cloud's Tensor processing units. By the way, this is why it doesn't really make sense to compare Tesla's D1 chips and training tiles to Nvidia's GPUs and DGX pods, beyond a few high-level numbers. Tesla's chips are designed specifically for video processing and machine learning to support full self-driving. That's why Tesla also built a massive compute cluster made up of 10,000 Nvidia H100s, which came online at the exact same time as Dojo. And why Tesla showed off 3 other GPU clusters using over 10,000 Nvidia A100s during their previous AI days. Tesla's chips aren't magically better than Nvidia's, and they're not worse. They're just different, but Tesla only built them because Nvidia couldn't keep up with demand. That lack of supply is why Nvidia's chips are so expensive in the first place, which changes the math around which chips Tesla needs to buy versus which ones they should build themselves to optimize their costs, just like every other data center. But that raises an important question. If Nvidia's chips are so expensive, why does everyone keep buying them?
My God, that is the best coffee I've ever tasted. Why the hell are we making meth?
Something many investors may not realize is that Nvidia doesn't just sell GPUs. Nvidia's CEO Jensen Huang has been announcing tons of new products and services across the entire AI stack all year. Here's a quick clip of him explaining the huge leap in performance that Nvidia's solutions give data centers over their current configurations.
The GPU server is no longer the computer. The computer is the data center. Your goal is to build the most cost-effective data center, not build the most cost-effective server. Back in the old days when the computer was the server, that would be a reasonable thing to do. But today, the computer is the data center. So for $10 million, you buy 48 GPU servers. It only consumes 3.2 gigawatt hours and 44 times the performance. Let me just show it to you one more time. This is before, and this is after, and this is...
So if a data center switches to Nvidia systems, they could do around 150 times more work with the same amount of power, or power the same size large language model at around 4% of the cost. And this isn't even on their H200s. This is why demand for Nvidia's data center products is through the roof right now. Not just for Nvidia's DGX H100s or their H200 GPUs, but also their networking technologies that companies like Microsoft, Google, and Tesla are using in their data centers. Remember those 3 big computing clusters from Tesla's AI Day, filled with Nvidia's A100s? Well, they're networked with Nvidia's InfiniBand as well. In fact, a good portion of Nvidia's latest earnings call focused on these networking solutions. Nvidia's chief financial officer, Colette Kress, highlighted that Microsoft uses over 29,000 miles of InfiniBand cabling in Azure's data centers. That's more cable than it takes to circle the globe. And annual revenue from Nvidia's networking solutions now exceeds $10 billion, a 155% increase year over year, thanks to a 5-fold increase in InfiniBand orders. Don't sleep on Nvidia's networking solutions. Another data center solution that I think investors are really sleeping on is Nvidia's modular MGX server platform. This one platform can have many different configurations for many different kinds of applications like cloud services and gaming, high-performance computing and data analytics, digital twins for manufacturing, robotics, telecom, and of course, AI training and inference. All you have to do is switch out which chips you're using depending on your need. And because Nvidia is supporting these form factors across future generations of their hardware, they're locking in their data center customers for many years to come. Not to mention that the cost of switching away from this ecosystem down the road will be too high for most data centers to really do it. By the way, Supermicro just started shipping the first Nvidia MGX systems last month, and I'm excited to hear more about them in future earnings calls. Nvidia's gaming revenue came in at almost $2.9 billion, which is up over 80% year over year and 15% quarter over quarter, even with lower demand for high-performance PCs. I think that demand will trend back up over time though, as generative AI makes its way into more desktop applications and increases the need for more powerful GPUs beyond video games. Nvidia's professional visualization, automotive, and OEM segments accounted for less than 5% of their overall revenue combined. So I'll keep covering them in other videos like I always do. I know this video is running a little long, but I want to be thorough because Nvidia's data center business accounts for over 80% of their total revenue. It's by far their fastest growing segment, and it's where they're innovating and investing in the most today. So if you feel I've earned it, consider hitting the like button and subscribing to the channel. That really helps me out, and it lets me know to put out more research like this. Thanks, and with that out of the way, there's really only one question left to answer. Would I still invest in Nvidia after this earnings call? Like I said, I don't think any other company can compete with Nvidia's current AI data center solutions, which is made up of much more than just GPUs. On top of that, Nvidia is actually increasing their pace for new releases. They recently announced their H200s, which are set to ship in Q2 of next year. But they're also expected to announce their next generation GPU architecture called Blackwell, which should be a significant upgrade over Hopper. They'll be rolling out their B100 data center GPUs and Grace Blackwell superchips, as well as new Blackwell-based GPUs for PCs. And of course, we should expect big upgrades in their InfiniBand and other hyperscale networking solutions as well. The only risk I didn't really mention is US sanctions on selling AI chips to China, which I don't see as a big risk at all. Even though China accounts for 20 to 25% of Nvidia's overall data center revenue, it's also the riskiest portion of their revenue today. In the past, Nvidia complied with sanctions by selling slowed down versions of their A100s and H100s to China. But in their latest earnings call, Colette Kress confirmed that Nvidia expects less revenue from China going forward, and their $20 billion revenue guidance for next quarter already accounts for that. To me, this means two things. First, it means that the drop in revenue from China will be more than offset by revenue growth from other regions. And second, it means that Nvidia is trading out risky revenue for more predictable and stable revenue over time. That's why I think it's pretty funny that Nvidia's stock dropped after such a great earnings call. And finally, even though Nvidia stock is near all-time highs, it's the cheapest it's been basically since ChatGPT came out, due to their earnings rising much faster than their market cap. So yes, I'm still buying Nvidia stock, and I'll keep buying it until a real competitor comes along, which is exactly why it's so important to understand the science behind the stocks. Thanks for watching, and until next time, this is Ticker Symbol U. My name is Alex, reminding you that the best investment you can make is in you.